The Employee Retention Credit from the IRS is the last major COVID relief program. Claim up to $26,000 for each employee you had on payroll. This is Marty Stewart with Disaster Loan Advisors. The IRS tax refund is newfound money for your business. Let us help you navigate the ERC program with flexible options and working together. You can relax and have peace of mind that you're in good hands. Stay safe, stay compliant, and keep more of your refund. Take the next step and schedule a free ERC consultation call with us today.
Does the Employee Retention Credit reduce wages or payroll taxes? How does the Employee Retention Credit program affect past wages paid and current payroll taxes? The Employee Retention Credit has been a lifeline for many small to medium-sized businesses navigating the challenges brought on by the COVID-19 pandemic. As a tax credit offered by the Internal Revenue Service, it aims to help employers retain their workforce while providing financial relief. However, there's often confusion surrounding its impact on wages and payroll taxes. We'll explore how ERC affects these aspects of your business and shed light on important updates and eligibility requirements you need to be aware of. Yes, they may or may not affect your tax liability. However, past business taxes from 2020 or 2021 will have to be amended depending what ERC refund checks you receive for those tax years. If you have not already filed, you can still claim the Employee Retention Credit retroactively in 2023, 2024, and 2025. Key aspects of the Employee Retention Credit. The Employee Retention Credit is a tax credit offered by the IRS that provides financial relief to eligible employers impacted by the COVID-19 pandemic, incentivizing them to retain their employees. ERC reduce wages or payroll taxes. Definition and purpose. The Employee Retention Credit is a refundable payroll tax credit introduced by the Internal Revenue Service in response to the COVID-19 pandemic. Its primary purpose is to provide financial relief for small to medium-sized businesses and encourage them to retain their employees during economic hardship. For instance, if there was a small business experiencing significant declines in revenue due to the pandemic, it might consider laying off employees as one of its cost-cutting measures. To avoid this, the ERC provides an incentive for these employers by allowing them to apply a portion of qualified wages paid against their employment taxes, thus significantly lowering their financial burden while keeping valued employees on board. Important eligibility criteria for ERC. To qualify for the Employee Retention Credit, small to medium-sized business owners should be aware of specific criteria that must be met. 1. The business must have experienced either a significant decline in gross receipts, a full or partial suspension of operations due to governmental orders related to COVID-19, or be a recovery startup business. 2. A significant decline in gross receipts is defined as at least a 20% reduction compared to the same calendar quarter in 2019. 3. Recovery startup businesses are those that began after February 15, 2020 and have annual gross receipts not exceeding $1 million. 4. Eligible employers can be corporations, tax-exempt organizations, partnerships, and sole proprietors. 5. Employers must pay qualified wages to their employees during eligible quarters. 6. Governmental entities may be eligible under certain circumstances. However, federal agencies and instrumentalities are generally excluded from eligibility. By understanding these eligibility criteria, small to medium-sized business owners can determine if they qualify for the ERC and make informed decisions about how this tax credit could benefit their businesses. Benefits of ERC for small businesses. The Employee Retention Credit offers numerous benefits to small businesses, providing much-needed financial relief during these challenging times. As a refundable payroll tax credit, the ERC helps eligible employers reduce their overall payroll costs and allows them to maintain a stable workforce. For example, a small business with 10 employees earning $30,000 each in qualified wages could receive up to $30,000 in ERC, assuming they can claim the maximum 50% credit on the first $10,000 per employee. This monetary boost enables them to sustain their operations without laying off workers or drastically cutting down hours. Benefits of ERC for employers. ERC helps employers retain employees, reduces overall payroll costs, and provides financial relief during the COVID-19 pandemic. ERC helps retain employees. The Employee Retention Credit is a valuable tool for small to medium-sized businesses, particularly during economic uncertainty like the COVID-19 pandemic. One of the primary benefits of ERC is that it helps incentivize employers to retain their employees by reducing overall payroll costs. For example, a restaurant owner wants to keep their entire team employed but struggles financially due to decreased business during the pandemic. The ERC allows them to reduce their tax liability while keeping all employees on staff without cutting salaries or wages. This provides financial relief for both employer and employee, creating a win-win situation for everyone involved. Reduces overall payroll costs with the ERTC. One of the most significant benefits of the Employee Retention Credit for small to medium-sized business owners is that it can reduce overall payroll costs. By providing a refundable payroll tax credit of up to $33,000 per employee, eligible employers can offset some or all of their employment taxes owed. For example, let's say you own a restaurant with 20 full-time employees earning an average hourly wage of $15. With the ERC in place, you could potentially receive a credit worth $660,000, $33,000 x 20 employees over 2 quarters. By using the ERC strategically and consulting with an experienced tax professional who thoroughly understands its nuances and eligibility requirements, small businesses can take advantage of this opportunity to stay competitive and thrive amidst economic uncertainty. Provides financial relief during the COVID-19 pandemic. The COVID-19 pandemic has put a significant strain on businesses of all sizes. The Employee Retention Credit provides financial relief for employers struggling to keep their doors open during these challenging times. The ERC incentivizes employers to retain employees by offering a refundable tax credit, which can offset the costs of retaining team members, such as payroll taxes and qualified wages. The pandemic has hit small businesses particularly hard, and they may struggle with cash flow issues due to decreased revenue. The ERC provides much-needed financial support while allowing small business owners to focus on keeping their operations running smoothly without worrying about layoffs or furloughs. Additionally, new guidance has been issued for the third and fourth quarter of 2022, making it easier for eligible employers to claim this credit. ERC and its impact on wages. ERC does not directly reduce employee wages, but employers can use the credit to cover payroll expenses and help retain employees. ERC does not directly reduce employee wages. It's important to note that the Employee Retention Credit does not directly reduce employee wages. Instead, it provides financial relief for eligible employers during the COVID-19 pandemic by offering up to $33,000 in refundable payroll tax credits per employee. For example, a small business has 5 employees earning $50,000 annually. The employer could receive up to $165,000 in ERCs for retaining those employees during the pandemic. It's worth noting that there are limitations and eligibility criteria surrounding ERCs. Employers can use ERC to cover payroll expenses. One of the benefits of the Employee Retention Credit for employers is that they can use it to cover payroll expenses. This means eligible businesses can claim a credit against their payroll taxes equal to 70% of qualified wages paid from December 31, 2020 until December 31, 2022. For example, suppose a business paid $10,000 in qualified wages to an eligible employee during Q3 or Q4 of this year and meets all other criteria for ERC eligibility. In that case, they may claim a tax credit equaling up to $7,000 per employee on their federal employment tax returns. This reduces their overall payroll costs and helps provide financial relief during these economic times. Examples of how ERC can benefit employers. The Employee Retention Credit offers significant benefits to eligible employers. Here are some examples of how ERC can help small to medium-sized business owners. 1. Cover payroll expenses. Employers can use the ERC to cover payroll expenses, including wages, health benefits, and retirement contributions, among others. 2. Reduce payroll taxes. The ERC reduces the employer's share of payroll taxes, which means a lower overall payroll tax liability. 3. Financial relief during the pandemic. The COVID-19 pandemic has been financially challenging for many businesses. The ERC provides much-needed financial relief to eligible employers who have experienced a significant decline in revenue or had to shut down operations due to government orders. 4. Keep employees. The main goal of the ERC is to incentivize employers to retain their employees during these challenging times by providing a refundable tax credit for qualified wages paid to employees. 5. Lower overall payroll costs. Employers can significantly lower their overall payroll costs by covering payroll expenses and reducing payroll taxes, leading to more savings and increased profitability. 6. Use with other tax credits. Eligible employers can use the ERC alongside other tax credits, such as PPP loans, making it easier to manage their finances and stay profitable. 7. Sustainability of small business. Through the financial relief provided by the ERC, small businesses that may have otherwise closed down permanently could remain operational and sustainable even after the pandemic's effects wear off. Overall, the ERC provides various benefits to help small to medium-sized business owners reduce costs while retaining employees during these difficult times. ERC and its impact on payroll taxes. The ERC reduces the employer's share of payroll taxes, reducing overall payroll tax liability. ERC reduces employers' share of payroll taxes. Employers can also benefit from ERC by reducing their share of payroll taxes. The credit is refundable and can be applied to the employer's share of Medicare taxes paid on qualified wages paid after March 12, 2020. And before January 1, 2022. For example, suppose an eligible employer pays $20,000 in qualified wages during Q3 or Q4 of 2022 to retain their employees due to a COVID-19 related government shutdown order and qualifies for the credit at the maximum rate of 70%. In that case, they can save up to $14,000 against their required deposit for federal employment taxes in Q3 or Q4. It's important to note that while ERC reduces the employer's share of payroll taxes, it does not affect employee withholding amounts or Social Security payments. Reduces overall payroll tax liability. One significant benefit of the Employee Retention Credit for Employers is its ability to reduce overall payroll tax liability. The ERC provides a refundable payroll tax credit equal to 70% of qualified wages paid between January 1, 2021 and December 31, 2022, up to $28,000 per employee. For example, if an employer paid $10,000 in qualified wages during Q3 of 2022 and claimed the ERC for that quarter, they could receive a credit of up to $7,000 against their share of Social Security taxes. It's important to note that claiming the ERC may require adjustments when filling out employment tax returns or making deposits with the IRS. Examples of how ERC can help employers. The Employee Retention Credit can provide significant financial relief to small to medium-sized business owners during the COVID-19 pandemic. Here are some examples of how ERC can help employers. 1. Covering payroll expenses. Employers can use the ERC to cover payroll expenses for eligible employees, which can help reduce their overall payroll costs. 2. Providing financial relief. The ERC provides a refundable tax credit that can be used to offset the employer's share of Social Security taxes, which can provide much-needed financial relief for struggling businesses. 3. Retaining employees. By providing financial incentives, the ERC encourages employers to keep their staff on board rather than laying them off or reducing their hours. 4. Reducing tax liabilities. The ERC reduces the employer's share of payroll taxes, which helps reduce their overall tax liability. 5. Improving cash flow. Because the ERC is a refundable tax credit, it can improve cash flow by providing businesses with additional funds that they can use to pay for other expenses. Overall, the Employee Retention Credit is a valuable tool that small to medium-sized business owners should consider when looking for ways to reduce their payroll costs and improve their bottom line. With new guidance issued in Q3 and Q4 of 2022, employers need to stay up to date with the latest information about this tax credit so they can make informed decisions about how best to utilize it. Eligibility and application for ERC. To qualify for the ERC, eligible employers must have experienced either a significant decline in gross receipts or a full or partial suspension of business operations due to government orders related to COVID-19. Employers can claim the credit on their quarterly employment tax returns. Specific criteria to qualify. To qualify for the Employee Retention Credit, businesses must meet the following criteria. 1. Have gross receipts less than 80% of what they were in the same quarter in 2019 or have been partially or fully suspended due to government orders related to COVID-19. 2. The business must be operational during the period for which the credit is claimed. 3. The employees retained must not be related to the employer, which means no family members such as spouses, children, siblings, or parents. 4. The employees retained must work at least 20 hours per week on average during the calendar quarter for which ERC is claimed. 5. Eligible wages used to calculate ERC can include certain health plan expenses and retirement contributions. It's important to note that each quarter has its criteria, so businesses must review eligibility requirements for each period they intend to claim ERC. Additionally, some industries may have specific guidelines or limitations on how the credit can be applied, so it's essential to consult with a tax professional if there are any uncertainties. Eligibility depends on the size and type of business. The size and type of business are important factors in being eligible for the Employee Retention Credit. The ERC is available to businesses with gross receipts that fell more than 20% in any quarter compared to the same period in 2019 due to COVID-19, or those whose operations were fully or partially suspended due to government orders. All wages paid may qualify for ERC purposes for small businesses, defined as employers with an average of 500 employees or less in 2019. However, only wages paid for non-working employees will be considered qualified wages for larger companies. For example, if a small business has experienced a decline in gross receipts due to the pandemic, it could claim the ERC on all wages paid during qualifying periods. Claiming the credit on quarterly employment tax returns. To claim the employee retention credit, eligible employers must file for it on their quarterly employment tax returns. The credit is claimed by reducing the payroll taxes owed to the IRS rather than as a separate line item on the return. This means employers can immediately benefit from the credit and reduce their overall payroll tax liability. Employers should remember that they cannot claim ERC and Paycheck Protection Program loan forgiveness for the same wages paid. In addition, there are specific criteria to qualify for ERC and limitations on how much can be claimed each quarter. Limitations and restrictions of ERC. ERC cannot be used for the same wages used for PPP and cannot be used with other tax credits, limiting its full potential in certain situations. It cannot be used for the same wages used for PPP. It's important to note that the ERC cannot be used for wages already used for PPP loan forgiveness. The same wages cannot be claimed under both programs, as this would result in double dipping and could lead to penalties and fines. This limitation can make it challenging for small business owners who may have already utilized their PPP funds on payroll expenses but are still struggling financially due to the COVID-19 pandemic. However, many other qualified wage expenses can still be used towards the ERC, such as health benefits and retirement contributions. It cannot be used with other tax credits. It's important to note that the employee retention credit cannot be used with other tax credits. You cannot claim the ERC for the same wages if you claim another tax credit, such as the Work Opportunity Tax Credit. For example, let's say your business is eligible for the ERC and WOTC for certain employees. If you claim $20,000 in qualified wages under WOTC, you cannot also claim those same wages under ERC. However, you could choose to claim different sets of qualified wages under each credit program to maximize your benefits. Examples of situations where ERC is limited. Small to medium-sized businesses need to be aware of certain limitations and restrictions to the employee retention credit. Some examples of situations where ERC is limited include: 1. Cannot be used for the same wages for PPP. If a business received a Paycheck Protection Program loan, they could not use the same wages for PPP loan forgiveness and ERC purposes. 2. Cannot be used with other tax credits. Employers cannot claim both ERC and other tax credits, such as Work Opportunity Tax Credit or Research and Development Tax Credit, for the same employee. 3. Limited eligibility periods. The ERC is only available for wages paid after March 12, 2020 and before January 1, 2022. 4. Smaller credit amounts for larger businesses. Eligible employers with more than 500 full-time employees can only claim the credit on wages paid to employees not providing services due to a government order or experiencing a significant decline in gross receipts. 5. Must have a significant decline in gross receipts. Businesses must meet specific requirements related to gross receipts to qualify for the credit in Q3 or Q4 of 2022. Businesses must understand these limitations when applying for ERC and ensure they meet all eligibility criteria before claiming the credit on their quarterly employment tax returns. Other tax credits available for employers. Various tax credits are available for employers, including the Work Opportunity Tax Credit, Employer-Provided Child Care Facilities and Services Credit, and the Disabled Access Credit, among others. Explanation of other tax credits available. There are several other tax credits available that small to medium-sized business owners can take advantage of along with ERC. 1. Work Opportunity Tax Credit. This tax credit is offered to employers who hire individuals from certain groups, such as veterans or government assistants. 2. Research and Development Tax Credit. This tax credit incentivizes businesses that invest in research and development activities. 3. Family and Medical Leave Act Tax Credit. Employers who provide paid family and medical leave to their employees may be eligible for this tax credit. 4. Disabled Access Credit. Businesses that incur expenses related to making their establishments accessible to people with disabilities may be eligible for this credit. 5. Small Business Health Care Tax Credit. Small businesses that offer health insurance coverage to their employees may qualify for this tax credit. Small business owners must consider all available tax credits and how they can work together to reduce overall tax liability. However, consulting with a qualified tax professional before taking action or making any tax decision is crucial. Benefits of using multiple tax credits together. Small to medium-sized business owners can take advantage of various tax credits, such as the Employee Retention Credit and the Payroll Protection Program. Using multiple tax credits together can significantly save payroll taxes and operating costs. Another example is combining the ERC with employer tax credits, such as the Work Opportunity Tax Credit or Qualified Small Business Payroll Tax Credit. This strategy can help maximize savings and reduce overall payroll expenses. Furthermore, employers should be cautious when working with third-party providers who offer services related to claiming tax credits. Many of these providers charge high fees and make false promises about their ability to secure additional tax benefits. How ERC supports small business sustainability. ERC supports small business sustainability by providing financial relief during unprecedented times, helping retain employees, and reducing overall payroll costs, which allows businesses to continue operating and contribute positively to the economy. Examples of how ERC has helped small businesses survive. Small businesses have struggled during the COVID-19 pandemic, but the Employee Retention Credit has helped many survive. Here are some examples. 1. A restaurant in California was struggling to keep its doors open due to reduced capacity and decreased revenue. By applying for and receiving the ERC, they were able to retain their employees and continue operating. 2. A retail store in Texas had to close temporarily due to local restrictions. They could use the ERC funds to pay their employees during the closure, which allowed them to reopen when restrictions eased. 3. A manufacturing company in New York experienced a significant decline in revenue during the pandemic but was still able to keep its employees on payroll thanks to the ERC. 4. A small law firm in Florida used the ERC funds to cover employee wages and other expenses, allowing them to stay afloat despite decreased clients. 5. An architecture firm in Massachusetts was able to retain its entire team and weather the economic downturn by taking advantage of the ERC. These examples demonstrate how the ERC has financially relieved small businesses during uncertain times. Helping employers retain their staff has allowed businesses to stay open and continue providing services even amidst economic challenges. Conclusion and summary answering: does Employee Retention Credit reduce wages or payroll taxes? In conclusion, the Employee Retention Credit is a valuable tax credit that offers financial relief to eligible small businesses during unprecedented times of uncertainty. As outlined, the ERC does not directly reduce employee wages or payroll taxes but can significantly reduce overall payroll costs and provide much-needed support for struggling employers. While its use has limitations and restrictions, the benefits outweigh any drawbacks in most cases. Employers should take advantage of ERC qualifications and seek advice from trusted sources while cautiously approaching third-party providers. Good news: there is still time to file. The Employee Retention Tax Credit can still be claimed retroactively, and there is still time to file, even in 2023, 2024, and 2025 for the past tax years.
As you can see, navigating the Employee Retention Credit Program is very complex and confusing to try to figure it out on your own. Even on the IRS ERC FAQ pages, it says this page is not current. There have been several years of updates and changes to this IRS tax credit already, including 4 congressional acts and 5 updated guidances from the IRS, totaling over 3,900 pages. Who has time to sift through all that information, let alone decipher some of the confusing language and rulings? In order to stay compliant with current IRS ERC rules and regulations, expert specialized help is highly recommended. Even if your business received an SBA PPP loan, you are still eligible for the ERC credit. If you think you may not qualify, it's worth a conversation to see if your business does. Let us assist you with a complete employee retention credit process, or if you might be stuck on filling out the IRS 941X forms correctly on your own. We are here to help. Stay safe, stay compliant, keep more of your refund. Email us at support@disasterloanadvisors.com or call us toll-free at 877-463-9777 extension 3. Or visit us on the web at www.disasterloanadvisors.com/ERC for complete details on the Employee Retention Credit Program for your business.